Hey everybody, how you doing? This is Rogue Quant One coming at you from Southern California. Look at that beauty. Southern California, which has become essentially an economic wasteland. Now think about America, right? America used to be really, really great. America was a place where immigrants could come, start a business, a small shop, do very well for their family, send their kids to college for the first time. And now what we have is the Federal Reserve, which isn't even part of the federal government. The Federal Reserve just announced that they're going to keep rates at zero for the US dollar until 2023. So what's happening? 2023, okay, they're not going to raise rates until 2023. So that means that if you make money and you put a little money in the bank, instead of getting a 5% or a 3% rate on your savings or any kind of rate, you'll get zero. Nothing. So why do you think everybody out there on Robinhood, cryptocurrency trading platforms like eToro, why do you think those people are not investing in the dollar? The 10-year just hit a new low, the 10-year treasury. So basically what's happening is we have a situation where the US dollar is depreciating in value because of inflation, right? So what happens when they print more money? Let's say you have $1 trillion printed and they print another trillion, right? They printed more money in 2020 than they did in the entire history of the United States. Now think about that. In 1 year, they printed more money, trillions of dollars, and it was more money than was ever printed in the history of the United States, right? Since we went off the gold reserve in 1971. So think about that, right? Think about what happens when you have a currency that's completely inflated. Things are going to cost more. A hamburger here in Santa Monica costs $20, a good hamburger, right? If you go out and have a drink or a beer in any major city, it's $10 or $12 for a beer and $18 to $20 for booze. Right? Now, think about this. You travel to Latin America. I've traveled to Latin America. Let's say you go to Colombia. Let's say you go to Costa Rica. Let's say you go to Panama. All of these countries have been through the same thing in a hyperinflationary environment, right? So what that produces is it produces a very weak currency. And when the currency is weak, what happens to other classes? Think stocks and bonds, right? If bonds go down, stocks go up, right? Let me tell you something. These money managers that went to school, a couple of years ago, they were trying to tell me to, buy bonds. But well, that's great if you're Warren Buffett, right? And you just have billions and billions, and you can just, take the 0.88% in 10 years. So what's really happening here is other asset classes, strong stocks. Everyone knows tech is working. Tech had its demise, original demise in 2001, whatever, right? So what's happening is that there's the demise of the US dollar. And this is something unlike we've ever seen. All the big hedge fund managers, Ray Dalio, Ackman, all these guys are out there saying the same thing. So very simply, we're going to see the dollar decrease in value, meaning that inflation, it's going to go up. So maybe that $20 hamburger, maybe in 2023, maybe it's going to be $40. I guarantee you it's going to be more like a $30 or a $40 hamburger. And then with tax, the tax that especially places like California are putting on the average citizen, the average small business which built this place, Taxifornia is basically going to take the rest. So think about cryptocurrencies. People are piling into cryptocurrencies because it's a decentralized ledger, right? People trust a computer program with a decentralized ledger, essentially a big linked list with a bunch of programs in it, right? People trust that more than they trust the leadership of the US government. So with a highly inflationary environment, we're looking at the depreciation of the dollar and an increase in things like Bitcoin. Now, what's my prediction? Hey, I'm not one of these stock gurus or anything like that, but I will tell you this. It hit a high of about 20,000, I think it was 21,000 a few years ago. It dipped down to 5,000. So take that take that 20,000, right? 20,000, 5,000. What's the difference? 15. You got 15,000 points above 20,000. Bitcoin is going to 20,000 plus 15,000. That's 35,000. And I guarantee you it's going to get there before 2023. People are rushing into Bitcoin. I mean, I bought a little bit, I'm not really a Bitcoin buyer. I'm not really a crypto investor or whatever, but if you basically, even last week I bought Bitcoin, it was at 19, it dipped down to 18,000, so I bought it on the dip. Now it's up to 23,000. Well, it's heading higher, and it's not just because I bought a few $100 of Bitcoin. It has nothing to do with my personal investment. What I really believe is happening is the US dollar is getting crushed. It's gonna go down. Goods and services are gonna go up. Real estate will go up, especially with low rates. I mean, out here on the west side of Los Angeles, there's a super high demand. Anything that's below, let's say, $2 or $3 million, a small one-bedroom place is going for over asking price. So we see that in an inflationary environment where the Fed keeps rates at zero. I mean, hey, I'm all happy to pay, almost no percent on debt. It's free money, right? It's going away. So just like South America or Costa Rica, when you go to Costa Rica and you have 100,000 colones, you really only have $200. So think about that. Think about $100,000 in the United States, maybe in 50 or 100 years. $100,000 in the United States will be worth nothing. It'll be worth 200 or 300, maybe $500, right? So we're in this extreme inflationary environment in the US dollar, but we're in a deflationary environment in cryptocurrencies. Why? Because of the halving. If you understand how cryptocurrencies work, there's a limited supply, and with crypto, going from 0 to 21,000 like a rocket ship, and then selling off to 5,000, cryptocurrency had that 15,000 point drop from its highs at about 20,000, 21,000 to about 5,000, right? So just take that rough number, that $15,000 delta, or I should say not delta, we're not talking options. So that $15,000 change in price, it went from, let's say 20,000 down to 5,000 a few years ago. And then from 5,000, it's gone all the way back up to 20,000, surpassed 20,000. And today, December 17th, 2020, Bitcoin is at an all-time high at 23,000. People are like, oh, it's not going to that. Let me tell you something, this thing is going to 1 million. And it's not some casino bet. There's a limited amount of Bitcoin. There's a limited amount of these current cryptocurrencies, and that's by design, so that it creates an environment of stability and decentralization of the currency, versus just having a bunch of bureaucrats who make so much more money than any of us decide our future. So think about the hyperinflation. We've got extreme inflation. It's stagflation because the unemployment rates. I mean, yeah, if you're at a tech firm or an engineer like me, a software engineer, and a CEO, if you can do any of those things, you'll be fine. But what about my friend who owns a restaurant down the street, or other friends that I have in the movie business out here? They're I mean, it's like they're doomed, So basically, I'm just reaching out to everyone and saying, I believe that Bitcoin and gold are going up. Even gold today, look at gold. Gold was coming up, right? So that's what we got. And it's Rogue Quant One out. It's good talking to you. Be safe and happy holidays.